Welcome. Glad to have you join us. I'm Craig Jeffery, the Managing Partner of Strategic Treasury. Glad you have made it through the second full day, the last day of the exhibit hall. I'm here with Chad Dickson from Wells Fargo Bank. Welcome, Chad.
Thank you very much, Craig.
So we are going to discuss the topic of open banking. Is it real or not? And some components there. So I really want to start off, Chad, if you could just give us an overview of what do you do at the bank?
Thanks, Craig. So I'm a strategist within our Insight Consulting group at Wells Fargo. So that's a lot of words, but the role that I play is I help connect the vision of what we're doing within our emerging technology and innovation group back to our corporate customers.
Is that as cool as an evangelist, or just a strategist is better?
My partners call it evangelism, some call it influencers. So,
okay.
Depending on who you talk to, there's a different name.
If we're going to talk about open banking or the concept of bringing the bank to the customer, I think there's some background we need to think about. Banking is a lot about distribution. You've got to get out to your customers, whether it's consumers, small businesses, or large corporates. You have to have that there. And you use the phrase bringing the bank to your customer. What does that mean? How is that different from going to the bank? Maybe give us a background on that.
Yeah, that's a really great question and a good setup around the theme that Wells Fargo in particular is taking with respect to how we've listened to our customers and what they're asking for us. So if you think about the history of banking, right, and I won't go all the way back, but just in terms of the technology that's been used, the first big transition, if you will, in banking engagement comes about when you start looking at moving from paper delivery, right, to the customer, or having the customer come into a branch to get information about their accounts. I'll skip forward a little bit and talk about how that first transition was around online banking, right? So we enabled the customer to access their bank account information anytime, anywhere they wanted to, except they had to come to our site to do that. It was ancillary to their systems. Great if you're a consumer, a little bit more difficult if you're a corporate customer. So if you fast forward a little bit in where our customers are, that idea was great, but that's about a 20-year-old philosophy of having them come to us and work on an ancillary system. What we're hearing now and what we've heard in the last couple of years is that they're wanting the user interface, their experience of banking, to be within their own system, as opposed to in our system, right, or at our site. So we're now looking to distribute banking services out into their systems, and not just their ERP and accounting systems, but into some of the ancillary applications that they have. And so it's really allowing them to develop new applications and provide higher levels of service out to their customer and supplier base by having this information or these transactions available to them.
So in the system, if I'm in my accounting system and I want to see my bank balance, you can make it so that it's available there. That makes perfect sense. You mentioned other systems or other applications. Maybe give us an example of another application where you would bring the bank to that application.
Yeah, absolutely. So first of all, you have to understand the concept of APIs. We're going to, for sake of time, assume that everybody understands how an API works to connect two different applications. That's not a new technology, and it's actually been in use quite a bit in connecting our customers' internal systems, right? So different applications talking to each other internally. But now there's an advent of being able to communicate to third parties or to other institutions, right, or other applications. Uber is a good example of doing that, right, pulling in an application information to create something new. So our customers are now able to create new applications or new processes within their business by grabbing things such as an API for payment, right, or an API for check image sharing. So if you think about the example that you're asking, if you think about customer service is a really good one to use. I'm a customer service agent. I don't work in the accounting system. They don't want me in there. I don't access it. But there are things that are in there. There's information in there that I need to be able to service a customer call, right? Or if I'm doing supplier engagement, there are things in there that I need to be able to service a supplier. Most commonly, those are things around payments, right? So if I'm providing customer service and a customer calls in, something happens and I need to refund them some money against their account, right? They had a service issue or what have you. Right now, what I have to do is I have to go to the accounting department, right, who's running disbursements and payables, put that request in. That's a multiple step process that takes time. With an API for a faster payment, or an API for even an ACH, that can be embedded in the customer service application. So we're not engaging with the accounting, we're engaging with the customer service application itself and allowing them to be able to initiate that single transaction service from that platform. That's providing a better customer experience for the end user, their customer, and it allows them to self-service without having to come to accounting or finance to be able to run that transaction.
Why is that better? Is it better because it's integrated? Is it better because I don't have to exit? It's better because there's less logins I have to remember? What makes it better?
Well, one, it's more secure because you're leveraging the security of the customer service application, right? They only have access to do that one transaction type on a limited basis. So there is security and protocol around the entire transaction. The reason is better is that you're not requiring either somebody in customer service or even accounting to have to log into our system to process it, right? Or to log into the accounting system to process it. The scenario that I hear a lot when I go out and talk to customers, and I ask them, what is the one thing that's painful to you that you wish you could stop, right? And they say, oh, customer service comes to us and looks for a check image, or they're asking us to make a payment, and we have to stop what we're doing, which is running the business, and then process that transaction, then communicate back to them that the transaction has been completed so that they can then communicate to the customer. That's very manual. It has an opportunity to drop somewhere in the process, and really it's a poor experience across the board. And so we're finding ways to be able to provide that information and that access to those transactions in other parts of the organization. And that's only one piece of it, right? The other piece, and where we're exploring even further, is building out integration through APIs with the ERP system as well. So traditionally it's been very forms-based and having to move files back and forth for integration. We're in talks with several ERP providers to be able to build out an API integration for an entire suite integration into the bank. So now, instead of, again, having to develop a file transmission in our format, right, because that's them having to come to us, they're able to do it in something that's native within their accounting application. What we're striving for and what we're trying to develop towards is Wells Fargo in the box, right? You open up ERP, your connections to the bank are already set up.
Wells Fargo in a box or Wells Fargo in every box. I guess the question too is, as you look at, you're going out to these application providers, what prevents companies, a corporation, from going to the tech provider, working with a fintech, as opposed to working with a bank?
There's nothing, and actually if you think about the open banking methodology, we're open to that, right? The idea is that we're providing these discrete services to be available to our customer or their third party. So historically, okay, so right now you're thinking about fintechs are a big challenge to the financial services industry. Well, ERPs are fintechs, right? They have needed to access banking information to be able to process financial transactions. A third-party payment processor is no different, right? They still need to access the bank to run that payment. We're more than happy to provide that capability to their partner. Now, in the case where they decide to bring in the fintech to help serve a need that they have, they're responsible for the due diligence to make sure that that fintech is secure, has financial backing, has data privacy and protection capabilities, and the technical wherewithal to continue to support them in what I consider a critical enterprise application. So the other way that they could do that is look to us to partner with fintechs. As they're telling us what their needs are, we're looking at the fintech community as a way to expand our ability to innovate rapidly and to be able to try new opportunities and new ways of processing transactions without affecting our existing platform. So we're continually looking through proofs of concepts and have investigated over 200 fintechs that we could partner with. We have 25 of which are, we have 5 that are in some form of pre-production or production, such as TransferMate, that we just launched with. And then we have many others that are in backlog behind that we're working with to be able to add either new enhancements to existing services or new services rapidly to our customer base.